Hey everybody, it's Ken and Daniil here, and we're with Jeremy Goodrich. So we're going to talk all insurance today. What's going on with the insurance companies right now? Because we're getting, most of our assets are in Texas and in Arizona, and we're getting whacked because these. And by the way, we don't have losses, so it's super confusing. What's actually going on?
So just some simple background that tells you what's going on, right? Insurance companies are for-profit businesses. Now, we don't have to feel bad for them. Lots of people make lots of money in the insurance world. But we have to understand that they're for-profit businesses to get what's going on. If we look at the loss ratio across the property insurance world in 2021, the losses added up to somewhere around 6 billion total losses. Now, that's not that big of a number when you figure everything out, but 6 billion. In 2022, the losses were 36 billion. In 2022, insurance companies saw 6 times the losses of 2021, and 2021 was a higher loss year than years before for property. So why is that happening? Well, you've got, catastrophic storms. That's really the number one issue that we have going on right now is due to climate change or whatever we want to say. When we look at the data, there's a ton more storms. Those storms are more significant and do more damage. In Texas, the key example is the 2021 freeze, right? That one particular storm was the largest loss in the history of property insurance. Because of the way that freeze happened, so many pipes were broken, right? You probably had a lot of properties that had burst pipe because the power went out and the temperature went down below 32. A huge loss in Texas. That storm, that loss really created what we're seeing right now. In 2022, I was insuring properties in Dallas at somewhere in the $600-700 per door, right? Just as an average per door cost. I'm seeing prices in Dallas around $1,200-1,300 in 2023, right? That's double the cost of 2 years ago. No one underwrote when they were penciling out this on the front end. No one underwrote 60% increases a year in 2 years, right? And that's what's killing all of your deals. So the background reason for that is significantly increased losses. Insurance companies are for-profit businesses. When they start losing money, guess what? CEOs are not giving up their salary. Underwriters are not giving up their salary. There's only really one place where that money can come from, and that is from premium. We saw this in Florida in 07, 08. Multiple hurricanes came through at the same time, huge losses. Insurance companies ran from Florida. That's happening now in Texas, really because of that freeze and because of Ida, the hurricane that came through right after. We're seeing the same thing in Texas. I think it'll stabilize, but it's never going to go back to where it was before. I think the difference will be, like in Florida, investors will come to understand that, look, this is the cost of insurance, and either I can profit by, obviously rent has to go up, something has to happen, or I can't. The thing about Texas is Texas property owners are not used to the kinds of prices that Florida property owners have seen for the last 7-8 years.
Yeah, that's a good point.
Do you think that part of the increase, though, is also due to inflation? Because is it really that much more damage, or is it just that much more to fix?
No, you're 100% right. So it's more damage, and then it's more to fix as well. And so we're seeing inflation of 30-40% on replacement cost. We were able to insure buildings, apartment buildings, somewhere between $70 to $90 a square foot, 3-4 years back. Now insurance companies are wanting to see $140, $150 a square foot. So that's a great point, Daniil. Not only is the rate increasing, but also the coverage is increasing because they want to see a higher number for what they feel it would cost to replace a building.
That's a great point.
And do you think that, that means more people are underinsured than before?
Yeah, absolutely. Because, those folks who haven't had to increase, especially in states like Louisiana, Florida, Texas, a lot of those insurance companies aren't putting as much pressure on the replacement cost. The rate is going up, but if you want to underinsure your property, that's kind of up to you, right? And so we're seeing increases in rate, and then property owners are saying, oh man, I'm already got 30% increase. I'm not going to raise up my coverage to have my building fully insured because that's going to cost me another 20%. And exactly like you're saying, that means you're that much more underinsured. And if we dig into a claim situation and you're underinsured and you have some of the clauses that insurance companies put in claims, that's where salt in the wound. You get to the claim side, you got a $500,000 claim, and an insurance company is saying they want to pay out $150,000 because of this, that, and the other clause in the policy, as well as underinsuring. So that's really the other side of it. This is kind of frustrating for a property owner is I'm paying all this for insurance. And then when it comes to claim time, suddenly the insurance company doesn't want to take care of me.
We had a deal in Florida that we were looking at, and the insurance bid came in at $2,200 a unit. And it wasn't even on the coast.
Yeah.
And I was like, man, it basically killed the cash flow. And to put that in perspective for everybody, maybe it was 700 or 800 2 years ago, 3 years ago, perhaps, but it's almost 3 times in that particular instance. And I know a lot of my friends who have been buying in Florida are now turning to other areas because, when you're, if you take $1,000 a unit times 300 units, you're talking about a fair amount of money there.
Absolutely.
300 grand right off your cash flow just from an insurance policy, in a period of 2 to 3 years is significant. And it really is redirecting a lot of managed money, I believe, right now. At least I'm seeing it. I'm seeing people just basically gloss right over Florida. And I think that's why North Carolina, Atlanta, primarily Atlanta, and some areas of Nashville have jumped because, those would be normally, those Southeast folks would normally be in those markets as well.
Absolutely. I have a ton of clients writing in, purchasing properties, North Carolina, South Carolina, the belt there, and not purchasing as much in Florida. I have lots of clients who are purchasing in Florida, purchasing in Texas. You just have to understand the number, but with the fluidity, I do think that these things are going to stabilize. It just can't be all over the place like this. It may be more expensive still. And if you're paying $1,000 a door in Orlando when you were paying $600 a door 3 years ago, that's pretty tough to swallow for the exact reasons you said.
So obviously we're seeing these increases and, everybody's handling them a little bit differently. The first thing that people do is jump from broker to broker, right? Because they just assume that, the broker's taking more commissions or whatever, but really it's an industry-wide issue. What are some of the things that you're telling your clients? Because we've looked at higher deductibles, different kinds of coverages. We've looked at captives, and I know our conversation inside of our company is not unique to, what a lot of people are dealing with. And it's resonating all the way up to Wall Street because these insurance renewals, a lot of people may or may not know, when you're getting a loan from Freddie or Fannie Mae or whoever, they're escrowing the insurance.
Yep.
And so they have the money already and they pay the bill because they're the mortgage, they have the mortgage and they're making sure the insurance is paid. So now they're looking at 30 and 40% increases. So a lot's happening in this space. What are you seeing going on right now with your clients?
Yeah, absolutely. So I gave you all the bad news. Let's start to talk about how to handle it, right? Like it is what it is. So how do we handle it? And I think the best way is to kind of work up portfolio size, because I know you said, Danielle, that you work in smaller spaces, house hacking, duplexes, things like that. So if we're talking in the smaller level, I think the first thing you can do is increase your deductible. If you're an investor and you can't handle a $5,000 deductible, you may need to rethink some things, right? So if you've got $1,000 deductible, like you have on your personal home or something like that, raising the deductible is the number one easiest way to decrease the cost of insurance, period. So I'd say that's the first thing. The second thing is to, find the agent or the company that can offer you a decent price without stripping the policy down to the point where it doesn't pay a claim. If you're paying $8,000 in insurance instead of $10,000 in insurance, but in a claim situation, it doesn't basically pay anything out, why are you paying the $8,000, right? So don't give up on the idea of understanding, at least at a basic level, how insurance works and trusting somebody who's actually going to take care of you. Independent insurance agents oftentimes have better options because we are shopping companies for you. But sometimes you go to a State Farm or an Allstate or something like that, especially with duplexes, single family rentals, flips, things like that, you might be able to find a decent deal. I really feel like we call them captive insurance companies, the ones that have Super Bowl commercials, right? They really stop insuring commercial property. Really when you cross 5 doors, 5 units, a little bit more sometimes they can handle. But if you've got a portfolio full of properties that are less than 5 units, you may be able to do a State Farm and have that work for you, right? So that would be the first thing I would say is find a company that can work for you. I don't think that switching agents every 2 years really gets you anywhere. In fact, I think it has some negatives, but looking for someone that has the combination of being able to explain things simply. If you're talking to someone for 15 minutes and you walk away from that call and you're like, I am dumber than I was 15 minutes ago about insurance, then you're talking with the wrong person, right? So those are some of the simple things you can do. As your portfolio grows, as we're getting into larger properties, 20-door properties, 40-door properties, 100-door properties, really starting to look at how you can leverage that value. Now you're in the commercial real estate space, truly in commercial insurance. And, there are companies that can do better for that.
So we're wrapping up, Jeremy. I know, we were looking, it's funny how this came up. We insurance costs are rising. We're seeing a lot of chatter around it on our podcasts, our YouTube channels, and, all the different social medias. And so I appreciate you coming on and talk about that. I know your website, I want you to talk about that, Shine Insurance, and you have a lot of really good stuff on LinkedIn as well. You want to tell everybody where they can check you out?
Yeah, sure. We're at shineinsurance.com. One of the tools we have is at shineinsurance.com/ballpark. If you'd like an insurance ballpark, it's just nine yes or no questions along with your property address, and we'll give you kind of an automated ballpark insurance number that we think would be good to underwrite with. So that's a nice tool. You can just bookmark and use it as you're penciling deals. But besides that, if you're a smaller investor, we might not be the right fit for you right now. But as you come into your larger portfolios, we'd be happy to talk to you about some creative solutions. I'm all over social media, LinkedIn, and other places, so you can certainly find me there.